Hi, Adam Mills here with Royal LePage, and welcome to our latest What's the Deal episode. So today the title is Avoid Being a Target for Mortgage Fraud, and what are the 3 green flags you can follow? So before I introduce formally our guests, they actually have this really slick video that we can play. So I'll let that one roll, and then I'll do my usual intro from there. That's awesome. I got to get myself one of those. I like it. So before I introduce you guys, so we have Marc and Eric here, who are bilingual mortgage experts at the Ottawa Mortgage Shop. And in their work as mortgage brokers, they offer a unique, flexible, and modern approach to the home buying process. And like our team, the Adam Mills team, they're driven by passion and commitment for the Ottawa community. I think earlier on in their careers, they realized that they were working in an outdated industry where, practices weren't really keeping up with technology and the way things were evolving. So they decided that they would do things a little bit differently by embracing innovation, collaboration, and creativity. So without further ado, guys, thank you again so much for taking the time to be here and to join me for all this.
No problem. Thanks for having us.
Thanks for having us.
It's I know it's always kind of stressful getting onto one of these online type events where there's a million and one technology things that could backfire on you. So anyway, I appreciate you.
Fingers crossed.
Yeah, that's it. So far, so good. We're doing great. So I can tee up things for you guys and for everyone else here too. So the focus on what we're going to dive into today is really based on a video that came through. I think it was a marketplace one where there was mortgage brokers and realtors who were involved in essentially a mortgage fraud scheme, where they were taking people who didn't really know the buying process and putting them down a really dangerous path and giving them false information so they could, one, I guess, sell a home and two, get a mortgage done. And sadly, the target for this, from what we saw, seemed to be immigrants or newcomers who probably don't really know the buying process all that well. So we thought, this is important to Canada, but from an Ottawa, centric, perspective, in around 44% of newcomers to Canada actually land and stay in Ottawa. So, this has a huge impact to Ottawa. So we want to dive in. I mean, that whole marketplace thing was, focused on the red flags. I think we want to flip this on its head today and say, okay, well, let's try and maybe focus on some more positive stuff and talk about green flags and like, what can we do? What can mortgage brokers do to actually do their job well and not put people in that position where they're going to be going down a fraudulent path. Just by empowering them with information that obviously that you guys, go over on a daily basis.
Cool. Yeah, we'd be happy to share what we know. So, so there are some red flags, that marketplace thing that or documentary video that you talked about. So, people are being taken advantage of, and it's people who don't, like you were saying, don't know the exact process of buying a home. So the green flags, what you should be looking to do is to make sure you're dealing with accredited mortgage brokers and licensed real estate salespeople. And, the more experience they have, typically the better they are. Somebody who's successful might not be as desperate, I guess, for a commission and go down that road of trying to make a buck on somebody where it's going to cost them quite a bit. So green flags that you're looking for is as what I'm saying is, make sure you're dealing with some accredited professionals.
And there's a lot of talk with scams and all that type of, but we're regulated so hard from FSRA on compliance and a lot of things that we need to do and send in to make sure that every mortgage broker out there is doing the job legally and to the standards that are offered to us by the government. So when you're talking about one of the green flags is to make sure that your broker is going to be able to give you a pre-approval and the proper qualifying rate. If the broker out there is just giving you a pre-approval and hasn't sent it to a lender, or you don't have a pre-approval stated from a lender, I mean, that's a pre-approval that was written on a napkin, really.
Yeah, it's got to be on company letterhead. It's got to be, it's got to have the specifics, the rates, the term, the financing conditions that might come up based on the approval. So once you have that in your hand, then you're dealing, with somebody who's going about it the right way. Also, another way to know that you're dealing with somebody who's caring and looking out for you and not for them is, somebody who wants to hear your story, what your goals are, your family life, everything. Really, to make sure you're not putting someone in a position that that where they're not going to be able to obtain their financial goals. So that's another one. The conversation you have with the broker or the real estate person is often quite telling.
And Adam, I think that's one of the things that come up with us, that we worked with major banks prior. So our whole idea here is not to only help somebody with a mortgage, but the whole financial picture. So if they have a bruised credit, or if they have an abundance of debt, we create a plan on that end, which has nothing to do with the mortgage, but we help on that end to make sure that everything goes smoothly, and that they're not in a position later on in life where it's a struggle, right?
It makes a lot of sense. I mean, and I love the fact that, you guys aim to dive a little bit deeper with your clients and not just say, okay, like, how much money do you make? How much is your car loan? And say, okay, cool. Here's what you can afford. Going deeper and saying, okay, well, what's your vision? Where are you guys going? Like, you're going to have kids in your family? Are you going to, get pets? Or like, like, are your kids going to be playing sports? Like, all these things impact your daily expenses, your monthly expenses, and will impact their lifestyle. And I think if you don't check that lifestyle box, I think you're transactional and you're getting a mortgage done, but you're not creating that lifetime, long-term client. And it's short-sighted.
Yeah, it is short-sighted because, when you qualify for a mortgage, or one that's insured by CMHC, I won't get into too much of the details, but you qualify for up to 44% total debt servicing ratio. So essentially 44% of your income has to represent, the mortgage payment, taxes, your outstanding debts and all that stuff. But that doesn't mean that somebody is, you don't want to say, okay, you qualify for 750 and that'll bring your debt ratio at 44%. Realistically, maybe they can't afford it because their lifestyle is different than, their neighbor's lifestyle, where they have 2 kids in daycare, they have this and that. And, some people travel, some people like to go to the restaurant. So it's different for everyone. So you really do have to know your customer. One
other thing, a question I've had that gets asked of me, and again, I try and stick handle this, but I always caveat with me saying I'm not a mortgage broker, so go talk to yours.
Yeah.
But for a pre-approval to be done, I guess, for lack of better terms, being done well, does that involve pulling credit so you have a credit score of that client?
100%. I mean, there's a couple of things that we're going to look at, credit being one of them, and the other one is going to be income verification. And the other one is going to be the down payment verification. Nothing is more frustrating than somebody who tells you, don't pull my credit. We don't have any debt. When you pull credit, they forgot that car loan, or they forgot that line of credit that they had on the side, which plays a huge factor in how much they can qualify for. So 100%, we're going to look at the credit. That's number one key to make sure that the score is good. And to be honest with you, if it's not, we're going to create a plan for that client to make it good. So maybe they're going to buy in 6 months from now, a year from now, but at least we're creating that plan with them. The other thing is the income verification. So, if you're working for the government, you've been working there for 10 years, I'm pretty sure you know what your salary is, but there's a lot of PSWs, nurses, self-employed, police officers, they work overtime. So it's a little bit more complicated because they're going to write on the application what they made last year, but it's not really how it works in the mortgage business. So we ask for to qualify the documents to qualify on the income as well. And the biggest change we've seen since 3 years ago is the down payment. The down payment is one of the biggest hurdles or biggest paperwork that we have to go through in order to make sure that you have the funds in your account for 90 days. You got to make sure that you can explain any large deposit that goes in there. And if it's from a different account, I need 90 days from that account. And if it's from another account or a parent or anything that is a large deposit, we need explanation.
Yeah, you need a roadmap essentially of figuring out where all the money's coming from. So and they really look at that with a fine tooth comb. So so that's a big one. It's often people say, yeah, I have X amount, 50,000 for a deposit or down payment, but when you really scrub it, they do have 50,000, but not 50,000 that CMHC or whoever is going to be able to use as part of your down payment, because there's some odd deposits and whatnot. So,
right.
Those are the three things we're going to look at majorly when we're doing a pre-approval. So when we do give you a letter of pre-approval and say you're pre-approved for 550,000, well, you're pre-approved for 550,000. It's not a napkin letter saying, well, I could do 575, but 550, and that may have worked 2 years ago when interest rates were going down and qualifying rate stayed the same. But nowadays, with the ever-changing market and the fact that the qualifying rate, every time the rates go up, the qualifying rate goes up. So you really need to get that pre-approval done through a lender and make sure every 120 days is what it's good for, and make sure that every 120 days you renew that pre-approval.
Right. Two questions. One actually that came through social here. And so, when you do this initial consult or this meeting that you're going to do with a new client that you're going to onboard for a pre-approval, you don't have to walk us through the entire thing in tons of detail, but just as a quick high level, what does that meeting look like? Are both of you involved? Is it one or the other?
No, typically it's going to be one or the other. So Eric and I do, share the business here. However, we're there for backup, for bouncing ideas off of each other. But typically, the client will only deal with one of us. So the first step is really it's a discovery call or a discovery Zoom or a meeting in person. So really is, okay, I know you need a mortgage, but let's find out everything, like what I was talking about earlier. What's your lifestyle? What's your, what are your goals? All those things. So we want to determine that before. Then after that, once we have kind of what their wants and needs are, then typically it'll go to sort of the application stage where, we'll get the clients, if we're not in person, we have an application form online that's very easy to fill out, where they'll fill out the application form, and then we get it back. And then, very, very soon after getting it back, we can get back in touch with them, go over through the application, ask if any questions or any things that are unsure, and then, notify them of the documents that will be needed to secure the pre-approval, the rates and the qualifying rates and all that stuff. And then from there, it's answering questions for clients, making sure they're comfortable, trying to find them the best products for their needs, the best rates, obviously the best terms, and all of those things. And then we follow them right through the process, right to the end. And
on that discovery call, every client that we talk to have different needs, different goals, different situations. So the call is mainly for us to ask our questions, to learn a little bit more, and to create a plan. So, we've got that 5-10 minutes with the client on the telephone, and we're creating a plan with them and telling them the ideas of how we see this turning out. So here's the action plan. Here's how we're going to do it. And here's what I'm going to need from you. So transparency is key when you come down to it. So if somebody says I have bad credit, we'll have a look at it. But being able to have that conversation and knowing where, in what bracket or what sandbox the client is going to end up with, having 40 different lenders, we have 40 different lenders that do different niches. So being able to know where the client fits. It's not like working at the bank where you only have one sandbox and this is what it is. We really need to understand the client and their goals in order to know where to fit them with which lender.
Yeah, it makes a lot of sense. And to follow up with that, if you're an investor, does that change that initial meeting much, or is it kind of like at the next stage when you're talking rates and down payments that changes, but the intake piece is still kind of the same idea?
It's the same idea. It changes the conversation a little bit in the sense that, you have to talk about, their investment goals and their portfolio and all that. So there's different questions that will come about, but in the general gist or terms of the discovery call will be more or less the same.
And we want to know, is this your only investment property that you want to do, or is there multiple coming? Because that will defer how we're going to position the initial mortgage. Mm-hmm. And many times we see this all the time where somebody else has taken this and put it in a difficult situation for the person to get the second property or the third property. So we make it so it's easier. So either we take a longer amortization, keep the payments lower. That way you could get pre-approved for the other, refinance your owner-occupied home, whatever the case is, to make sure that your goals of 1, 2, or 3 rental properties is attainable.
Gotcha.
Right?
Yeah. So it all boils down into the same thing, right? For you guys, it's like you want to fully understand their story, know what their goals are, and then from there, it's not like, okay, yes, I can help you buy 1 rental. If your goal is to buy 5, then great. Let's build out an awesome roadmap over the next 10 years or 15 years where you can actually achieve, those five purchases.
Exactly.
Yeah. And after that, it comes down to the rate and the approval. But for a rental property, I know rate is important. I get rate that is important, but for a rental property, at the end of the day, you declare that on your income taxes, the interest that you're paying. So as long as you're somewhat cash flow positive or breaking even on your rental property, I know rate is important, but I think getting approved for that property and with a proper plan and having an opportunity to go to the next also, I think that's more in favor and a better tool than what interest rate you got, right?
Yeah, no, I can appreciate that. Before we move on to our second green flag, there's another question that popped through there that I'll try my best to answer, and then if I make any mistakes, you guys can let me know.
We're here for you.
Yeah, I might need a lifeline. But yeah, so this one was, should I use the mortgage broker that my realtor suggests? So when I get this question, I have to be careful because, when we're referring people to certain service providers, we're supposed to give them 3 names. So outside of doing that aspect, my answer to clients is yes, you should use one of our service providers ideally, only because we have a really strong relationship with them. And if we need them on Sunday night at 6 p.m. because we have an urgent matter, I can actually find them. Unless they're highly confident that their broker is going to be, exceptionally talented at what they do, and will pick up my phone call at Sunday at 6. We're at a disadvantage if we're not using someone that I can call and derail your Thanksgiving dinner with my phone call, right?
Part of the business, but you're absolutely right. Working when you have a good symmetry, with the team that you're working with, the process is a lot smoother. That's a perfect example where, you need to reach them at 6 on a Sunday, you'll get a hold of them. That the people that you're referring the business to, they've obviously done good business for you in the past. So you're referring them with confidence to the next person. Because there's a lot of brokers, there's a lot of real estate agents out there, but not everybody's of the same experience, if you will. Eric and I have been in the business for lending and whatnot for about 18 years. So, so that goes a long way. But yeah, having everybody, the emails can even be, 3-way between the realtor, the lender, the mortgage broker and the client. So everybody's on it just makes for a
smoother transaction,
seamless transaction. Yeah.
Yeah. 100%. That clear line of communication, I find, is just so key. So that way everyone knows what everyone's doing, where they're all at, and it's just you can move forward and you can have a good plan at that point.
And when Adam, when you give names, you're putting your name out there too, right? Because you're the one who's suggesting this client. So you're going to make sure that whoever you're working with is going to give the proper customer service to your clients, right? And you could attest to that. Like we reply to emails within minutes. This is just, part of our values at the Ottawa Mortgage Shop is we answer our calls, we answer our texts and emails within minutes, which should be an industry standard, but it's not.
Yeah. No, I agree, and I can say that anytime that I've reached out, you guys are, someone on the team is lightning quick and you're going to get back to us, which is great.
And that's the part where we work as a team. If ever I'm not available or Eric's not available, that's when the backup part comes in, right? So yes, my client will be my client, Eric's client will be Eric's client, but we're always there to respond. If people have lives as well, so there's always one of us that's available for sure.
Speaking about this right now, I kind of feel guilty. I have both of you here already 20 minutes on this call, which means I'm just killing your stats for getting back to people in minutes. So
it's a quiet Tuesday so far. We're okay.
Yeah, so hopefully the people will give you a pass on it just because of what you're doing. Okay, so the first green flag we talked about was your broker offering you a proper pre-approval, and making sure that they go through that process in a really systematic and organized way. That second green flag that we want to really dial in, which I think we kind of jumped to as well, is performing the credit check. One thing that I've always wondered, and I get clients that ask me, is if you have low credit, let's say, like the A-type lenders and B-type lenders, do they have like certain thresholds of what credit they need to allow you to get into that box, if you want, so to speak?
Yeah, the A lenders definitely do. They work on score, partly score and TDS. So anytime something's insured specifically, meaning less than 20% down, credit becomes important. There's no set number per se, but 680 is kind of the starting point on that side. And then on the B side, credit score, is important, but doesn't disqualify you. So it's important in the sense of what kind of pricing you're going to get. So sometimes on the B side could be somebody who's self-employed, who's not declaring income, or whatever the case is, newly self-employed, those types of things, but they have an 830 credit score. They'll get better pricing than the person who's just got bruised credit and has not paid bills or whatnot and has a 550 score. They're both going to get approved, most likely, but with different rates.
Gotcha. Okay. No, that's great. And to give people a sense, if they don't know the difference, the primary difference between an A lender and a B lender, from what I gather, rates are different, but are there more differences, but other than just like you pay a higher rate if you go to a B lender?
Yeah, so we have B lenders. So the B lender here is going to allow us to have a debt ratio which is higher. So your normal bank will be at 44% debt ratio, which, property taxes, mortgage payment, existing debt divided by your salary. That's how you get that percentage. These B lenders, some go up to 50, some go up to 60. Okay. For people who don't declare a lot of income but are self-employed. So they understand that market. They'll also bruise credit. So there's going to be a difference in rate of about 0.50. Okay, so it's not huge.
I would have in my mind thought it was going to be a huge jump.
No, it's not a huge jump. And then on top of that, they add a 1% lending fee to it. So if your mortgage amount is $400,000, it's an extra $4,000 fee.
Okay. Does that get wrapped into your mortgage? Or is that just cash you have?
We could wrap it into the mortgage. Yeah. So for somebody, let's say, who has $60,000 worth of credit card debt, that $4,000 is made up so fast if everything is paid off and put into the mortgage. Mm-hmm. So on the grand scheme of things, you're cash flow positive. Everything is put on the mortgage. You got similar payments to what you had before. And the stress, I think the stress is the big one. When you have $60,000 worth of debt, waking up at nights, not sleeping, that whole aspect of everything is gone. Yeah. And it only costs you an extra $4,000. I mean, that's sometimes a no-brainer.
The one thing to keep in mind with these B lenders, alternative lenders, whatever you want to call them, is that the down payment, typically they're lending on the property as well a little bit. So yes, they are taking bigger risk. They are letting you extend your ratios for a modest rate increase. However, they typically want to see at least 20% down.
Gotcha. Okay, so that's another piece to be aware of.
Yeah.
And do you guys typically view a B lender as like a transition lender? Like, so if you get into it, but you get into it with the mindset of, okay, in 1 year, 2 or 3 years, whatever that is, like, we're going to create a good plan for you to get you out of this into an A lender?
Yeah, what we call it is an exit strategy. I
was looking for a good word. There we go.
Yeah, there it is. Exit strategy. That's your word. But you don't want to have someone, put someone in that type of mortgage and not care about them and say, you'll be in here forever and you'll suffocate eventually. That's not the goal. There has to be an exit strategy. What's coming up? What's an event that's coming up in your life that'll let us be able to, in a year or 2 or potentially 3, transfer you over to one of the big 5 banks, for example. So there has to be a plan. That plan could be, at that point there, I'll have 2 years of self-employed income statements, those types of things. I'll rebuild my credit by paying off my debt. So there's a lot of solutions, but yeah, you always want a exit strategy.
Yeah, and a perfect example. I just did a deal where, we put them in the B lending just to try and bring the credit up. We paid out some debt, and a year later, so the beacon score on the client was below 600, and a year later it's 735.
Wow, that's a
So
massive.
that financial picture of us clearing everything and putting it all in the mortgage and going on a B side just increase this person's purchasing power, save them on their credit score. I mean, that's the big thing about the discovery call, right? To create a plan to be able to be in a better situation in a year or two from now.
Yeah, no, I love it. And well, that like kind of leads us into like, so like the third green flag is, they listen is the third green flag. So you want to have a mortgage broker that's actually going to listen to you. And again, that's such a perfect example of, like you listen to what's going on in their lives, you asked good questions, and then you created a roadmap to get them from owning a home today to then owning a home and being in a better lending position tomorrow.
That's exactly right. Yeah.
So the listening part, I think, is the main key is understanding where they want to go, creating the action plan to do it. And like I said earlier, no client is the same. Everybody has a specific situation that needs to be. You need to have somebody who knows what they're doing in order to give you that roadmap, or else it's not going to work, and you're going to be in the same situation on your next home or when you renew your mortgage in 5 years.
Yeah, it's not a one-size-fits-all approach.
Yeah. Another question. So I mean, like, so on the real estate side, obviously, if I'm working with a buyer, if I'm working with a seller, we have a contract that we sign, whether it being a seller representation agreement or a buyer representation agreement. So there's something that says, hey, we're committing to actually work together. Is there a document that exists on the mortgage broker side? Like how like you go through this discovery, you do all of this legwork, but how do you know the client stays with you through this process? Like how does that work in the industry?
So there is a document, but we never get it signed. We want the customer service and our experience to speak for itself. You're going to have the proper service. We're going to get you the best deal possible, and you're going to enjoy either your purchase or refinance from start to finish. And that's the gratitude that you give us, is that you go with us. That's the gratitude. And obviously, it's not set in stone where you can go somewhere else. But ideally, if you have somebody that's offering you the good deal and the excellent customer service, there should be no need to go somewhere
Access
else.
to over 40 lenders. So we have it all. So why engage another broker, when we're there working for you anyways? We've got all the options there. So it's very rare that happens. So which is why we don't get people to sign, any legal documentation that, they have to deal with us or anything like that.
Okay. Well, that's great. I mean, it shows your level of confidence in the service and the systems that you've put in place. Cause I mean, time's not free. Like, you have overhead and your time's worth something. So
right.
If you're dumping your time into that and you're saying, I know people are going to come back to us and work with us because of how high level our service is, then I mean, it does speak for itself for sure.
Thank you.
So if other people who are watching now have questions, pop it into the chat, let me know. Another thing that I wrote down was, is there anything out there like CMHC, and I don't know how much CMHC stuff you guys know about that, but are there documents, are there things about how to prevent mortgage fraud? Like, are these big agencies trying to educate people about this?
I mean, there is. I could get the link. I was reading something on CMHC's website about mortgage fraud the other day. So they do touch on it and have some points, and similar to what we discussed today, to be honest, with some pointers. Making sure you're working with accredited people, those types of things. And then there's also mortgage fraud on the other side, being the applicant side. Providing false documents or false statements about their income, employment, term of employment, those types of things. So yeah, they do have some stuff on their website that I found helpful. It's out there.
It's funny, like me, being in the real estate industry now for 13 going on 14 years. Obviously, doing it as a team, we do a decent level of volume of sales and working with brokers. When I was prepping for this, I looked up like, I don't think I've seen anything on this. Like you would think that there should be something. And I dug around and found something, but I mean,
you do have to dig. Yeah,
that's kept secret. Like I don't know why it's so hard. Like this should be, I think, readily out there to help protect people.
I think it was a big thing, 10 plus years ago. I think FSRA has done a good job into making it so it's less and less.
Yeah.
And the lenders, since COVID, they don't screw around anymore. So you have your letter of employment, you've got your pay stub, and you got a phone call to the employer. So, you know, there's
I guess regulations in the industry for you guys have tightened and changed so much over the last, like, you know, 10, 12 years that, you know, a lot of the angles and ways to do this fraudulent stuff have really been kind of.
It's not the Wild West anymore.
Squeezed out, I guess, for the most part.
Which is great, right? So
yeah.
Oh, 100%. So I guess, you know, to wrap up here, if anyone's looking to, you know, to purchase a property, they want to, you know, look to start this conversation, have that initial consult with you. They can go to your website, obviously, Ottawa-mortgage-shop.com. You guys also have a good presence on social as well, so at Ottawa Mortgage Shop on Instagram, and you can really start that kind of initial intake where you guys will, you know, dive in and understand their story and then start walking them through the process.
Yeah, start the conversation. If you feel like you're in a tough spot, there's always solutions out there, and that's what we're here for.
No, that's amazing. Well, guys, thanks so much for doing this. I really appreciate it.
It's our pleasure. Thanks for having us.
And if you guys are game for it, we'll throw that video back on again because I really liked it.
Yeah, sure.
Okay, sounds good. Yeah.
Cool. That's great. That's a home run right there.
Nice.
All right, guys. Well, thanks again, everybody. Appreciate it.
Thanks for having us.
Thanks, Adam.
All right,
Take
have
care.
a great day.
We'll see ya.